Welcome all of you to Qsigma. In this video series, we are talking about Qsigma Trend Smart Trading System. In this video, you will able to learn the logic behind this algorithm. At first, our algorithm try to determine the market trend. It can be bullish or it can be bearish. This is done by our Qsigma Trend algorithm. Let's go to the charts. This is our system without our inbuilt axis system. In here you can see a histogram. It's called as Qsigma Trend. This is the special algorithm that detect current market trend. If the histogram is red in color, it means the current market strength is bearish. If the Qsigma Trend histogram is blue, it means the current market strength is bullish. As we see in this section, the market goes down. Same Qsigma Trend gives bearish strength signal. In here, the first time the Qsigma Trend switches to the blue, it means that says our market is going from a bearish trend to bullish trend. Then our main algorithm Qsigma Trend Smart only gives us long positions relative to the Qsigma Trend analysis. Okay, that's all. Let's go again to our slide. Then after the analysis of the market trend using Qsigma Trend algorithm, our main algorithm Qsigma Trend Smart is try to analyze market structure. According to us, there is two types of market structure called as impulses and corrections. Our algorithm is specifically developed for this section. It means it can identify an impulse and a correction in a mathematical way. Let's say, I'll give you an example. Let's say this is a impulse. This is a bullish impulse because market goes up. So this is if the market goes up for a long period, then this part is the correction of relative to the previous impulse. If market is trending up, our prediction is also to predicted impulse is so bullish. So this is the simple logic that our algorithm is inbuilt with. If we see a bullish impulse in the correction, we are trying to predict the next bullish impulse. If we see a bullish impulse, then we also saw a correction. Then our always prediction is to a bullish impulse. What happen if this will not happen and goes further down the market? Then our algorithm switching the previous impulse to a correction. As you see, this is the impulse and this is the correction. Our prediction is here, but suddenly it goes wrong and market further go down. Then what happen is the length of the impulse, as you see, the length of the impulse is exceeding by its correction. From this section, it's exceeding. Now the impulse, the previous impulse length is less than the previous the current market. So our algorithm switching this impulse to a correction and our correction market as a impulse. So this is the basic mathematical logic inbuilt within our algorithm. It try to calculate the impulse's length and relative correction length, and if it goes wrong, what happen is it's switching the impulses and correction. Okay, let me give you a clear idea. We go to the charts. Okay, this is the charts of Euro USD, and you can see These are the predictions. You can see our Qsigma Trend algorithm is running in the as a histogram. Let's say that this is an impulse. This is an impulse. Not edit as an I. Then this is the correction part. In this correction part, our algorithm give a signal that predicting this impulse, and it predicted this impulse. Then again it goes for the correction, and again it's predicted this bearish impulse. Okay, seems good because those are running to the same predicted direction. But what happened in this area? In this area, what happened is, this is the impulse and this is the correction. Our algorithm tried to predict the market, but what happened? It's further go up, and again it's try to predict. What happened? It's further go up. Then our algorithm is switch. No, when this impulsive length is passes by our correction length in here, our algorithm no longer give a bearish signals, because in this situation we have no longer a bearish impulse. Now we have a new bullish impulse. See, first this is the impulse, this is the correction. Now what happened is, our algorithm switching. Now this is the correction, now this is the bullish impulse. So in the corrections, our algorithm gives signals for predicting next impulse. Again correction, predicting impulse. I think you get some clear answer. After this video series, we are going to live trades and other things. Then you will be able to learn more about things. If you have any question about this thing, you can shoot me an email. In my free times, I'll be answer. Okay, let's go to the okay. So after analyzing the market structure, our algorithm is coming up with answer. Sometimes it may be an impulse, it may be a bearish or bullish, sometimes it may be a correction. If there's an impulse, if our market structure algorithm is determined a detector impulse, the algorithm is waiting for the correction, because in this algorithm we will never give predicted impulses within impulses, because we wait for the corrections to give a good prediction. In the correction, if the market structure is in the correction mode, the algorithm measure maximum correction length relative to previous impulses. Okay, that seems complex. It's okay, we'll discuss within the charts. Then the algorithm try to predict next impulse starting points. I'll tell you again, after analyzing the market structure, if the answer is correction to the algorithm, our algorithm try to measure maximum correction length. That's why I highlighted that. That's a good keyword, maximum correction length. And also its length is always relative to previous impulse. From those maximum correction length, it try to predict next impulse starting points. Okay, let's go to the charts. Okay, this is the chart, a Euro USD again. First we get a detected impulse, because our why I use the detected impulse is because our algorithm detect this as a bullish impulse. Then you can see there's a correction. In the correction, these are the blue dots are our predicted points. It means according to the algorithm, those are maximum corrections points. The algorithm identify 4 points of maximum corrections relative to previous bullish impulse. Then what happened? We are the maximum correction points mean the predictions of next impulse. Boom, we get a predicted bullish impulse. And also again, what happened is in the correction, we get maximum correction points. That's mean we are predicting next impulse. From there, that's the starting point of the next impulse. Boom, we get the predicted impulse. Same, and we can repeat it so many times. We get the maximum correction point, again we get the predicted impulse. Same here, every. But what happened in here? There are some few predictions to the bull side, but what happened is it all falling. Now you can understand, because I told you previously, our algorithm is able to find and switch correction to switch impulses. You can see our algorithm. Wait, I'll show you. This is the prediction related to this impulse. But what happened? It keep falling, and it again gives a prediction. Think that this is the start point of this impulse, but again falling. What happened is, then our algorithm detect, oh, that our calculations are wrong right now. Then we have to switch to what? Now our market is no longer in bull condition. Now our market is in bearish condition. That's why in here our algorithm detect whole this part as a bearish impulse. Then what is doing? Then our algorithm is giving maximum correction point relative to previous bearish impulse and give starting points of next impulse. Boom, we got a beautiful impulse. The same goes so and on. So this is our algorithm, simple logic that behind our algorithm. This is how our algorithm predict the healthiest part of the market. Those are impulses, and our algorithm is able to find the starting point. That's the most important part. Our algorithm is able to find starting points using the logic of maximum correction points that we develop using quantitative analysis.